If you wanna be crypto savvy, we can help you skip those valleys. Let's rally, yeah. If you wanna be crypto savvy, we can let investments tally. Let's rally, yeah.
What's poppin', y'all? Welcome back to the show. You are here at Be Crypto Savvy, where we are just trying to help the regular Joes like myself learn their way around this carnage that we like to call the crypto market. And before going any farther, I would like to say that nothing you see on this channel is ever financial advice, but rather should be viewed as educational and entertainment purposes only. All right, we are just going to jump right into this episode of Training Tools, where we will be discussing the RSI, which is also known as your Relative Strength Index. And today we will look at 3 different RSI indicators, and I'm also going to throw in what's called the ultimate oscillator into this video as well. So if you are following along at home, let's jump into the Bitcoin chart, and we are actually going to start on the 4-hour time frame. Okay, 4-hour time frame on Bitcoin. This green box is where we are going to focus on this video, specifically talking about the relative strength index. And if you want to jump into your indicators tab, if you're following along, the 3 that we are going to talk about again is your relative strength index, or just RSI, the Connors RSI, as well as your stochastic RSI. So first things first, we're going to talk about just your normal RSI. So this RSI is an oscillator that goes from 0 all the way up to 100. And you can see this little middle section in here that goes from 30 up to 70 with a line right in the middle. That's your middle point, which is just the 50% line. Now, the RSI is used to help identify potential overbought or oversold conditions in the market. Now, generally, the RSI, anything over 70, so this top line right here, anything over 70 is typically considered overbought to where you may be looking to see a pullback, while anything under 30, so this bottom line here, anything typically under 30 is generally telling you that the market is oversold and the price has fallen too low and is more or less going to be due for some sort of correction. So let's look at this a little bit deeper. You can see right back here, we were on May 10th, we were at the very bottom of this RSI. We completely bottomed out as far as the RSI is concerned. It's not necessarily all the way to 0, but when we get down into single digits, let me zoom out here just so you can see this. I'm going to zoom out, and you can see my line down here is at this point touching the bottom of that fin. You can see the last time that we were down that far on the RSI was in the beginning of November of 2022 all the way to March of 2023. So you can see how much time spans without without the RSI achieving those low of levels. So that just kind of tells you how unlikely it is for it to actually dip that low. So let's zoom back in here, and I'm gonna shorten this just so we can see this a little bit better. So right here on May 10th is that we were at the bottom of the RSI, and you can see it steadily climbed all the way to this date here, which correlates with the very top of this push. You can see actually right here, if you watched our video earlier, this is your 1, 2, 3, 4, and 5. That's our 5-wave push right there. And this oscillator pinpointed that perfectly. Right at the top here, you can see we had this little bit of a pullback, and right here was where our bottom on the oscillator told us, which almost got the bottom as far as the price was concerned as well. Now, one thing I do want to point out with the RSI oscillator is that it is another lagging indicator. This oscillator is telling you things that have already happened. So when you're using this, you have to keep that in mind and make sure that you're using this. This isn't a tool to use solely by itself. This is something that you use in conjunction with other tools in your toolbox that help confirm against one another trends or trend reversals. So that's the RSI part. Let's jump into the stochastic RSI a second. I'm actually just going to hit this X to get rid of the RSI, and I'm going to make this stochastic RSI a little bit bigger so we can see that. Now on this one, you can see, you know what, let me actually go back. I'm going to throw the RSI back on here a second because I want to show you the difference. You can see here, I'm going to make this bigger. We don't need to see that right now. Let me actually get rid of this one just for a moment so I can just look at these two. Now, this top one right here is the stochastic RSI. This bottom one right here is the relative strength index. Now, these are both relative strength index oscillators, but you can see how much different we are here. In the stochastic RSI, we are just turning the corner from bottoming out, whereas on the normal RSI indicator, we're still coming down from the very top with quite a ways to go. You can see if we have a trend line on this one, we've been setting lower highs since back here on the 14th of May or March, and we're continuing going in that downward direction. Whereas on the stochastic, we put that high in on March 17th and have been going down, and we're about to actually break through that, which would tell us that we very well might be seeing an upward push coming here in the near future. So I just wanted to point out those differences between the RSI and the stochastic RSI. Now, before going any farther, let's look at the Connors RSI. Let's throw that back on since I took that off a second ago. I'm going to put the Connors back on, and I'm going to make this bigger so we can see this. Okay, bear with me. Let's expand this so we can see a little bit better. Now with the Connors, you can see that we actually have just came back underneath the 50% line, which means we've still got a little bit of movement to the downside before this ends up reversing and comes back up. Now, I believe, in my opinion, I believe that the Connors typically probably gives you more of a short-term fluctuation outlook, whereas your stochastic RSI is giving you more of that longer, 14-day trend type of numbers. The RSI that I typically will go with is the stochastic. That's just my personal preference. If I was you, and what I had done when I was first getting going is play around with 2 or 3 of those, and kind of play around with a few different charts, kind of see how it hits. You can also change your settings. Like on the stochastic RSI, I actually have mine set up as instead of my upper band being at 70, I actually have mine set up as 80, and my lower band instead of 30 is set up as 20. So that's just my personal preference and how I like to set up my stochastic RSI. And then same thing as I was saying, throw the stochastic as well as the normal RSI on your chart, and just kind of see which one your eyes and mind are able to kind of decipher and use in the best way for your trading. So with the RSIs out of the way, let's take a quick look at the ultimate oscillator a second. All right, we have the ultimate oscillator on our screen. If you go to your indicators tab and type in ultimate oscillator, it'll pop right up. Throw that star on there, throw it onto your home screen or favorite tab rather, and you will be set up. Now throw that puppy on there. I have mine pulled up about midway up the screen. Typically it's down here. Just for ease of this video, I do have this pulled up. We're not going to compare it to the price. We're just going to briefly discuss the actual oscillator compared to the RSI. Now, the biggest difference between the normal RSI indicator and the ultimate oscillator is really just the way they are calculated. The RSI is more of a simple formula, where the ultimate oscillator is definitely more of a complex equation. So the RSI is a momentum oscillator that measures the speed and change of price movements. It's comparing the average gains and losses of an asset over whatever the specified time period is. Most of the time, that's about 14 days. The RSI value ranges from 0 to 100, like we talked about, with the reading between 30 and 70 indicating oversold and overbought conditions. Now, the ultimate oscillator, on the other hand, like I said, is a much more complex equation to come up with the data. This combines 3 different time frames to provide just more of a broader perspective of the market. And the ultimate oscillator is using weighted averages, closing prices, things of that nature. And then it also is smoothing in some of the volatility, and that kind of helps filter out some of the false signals. So the ultimate oscillator, same thing as your RSI. It has a range from 0 to 100, and the indicator or the range indicating either oversold or overbought is that same 30-70 line. So anything below your 30 line would indicate oversold conditions, where anything over your 70 line would indicate overbought conditions. So while both the RSI and the ultimate oscillator are both momentum indicators, they really are showing you where there's overbought and oversold commodities in the market. And like I said before, these are definitely, in my mind, tools that 100% have to be used in conjunction with other tools. Yes, that's the case with really everything, but these ones really are not good by themselves. They're a lagging indicator. They tell you what's already happened. Yes, you might be able to catch a trend after it's started, and maybe catch enough of it to make it worth your while. But these are definitely, in my eyes, used more in conjunction as confirmation pieces to other indicators to make sure that you're identifying trends or possible trend reversals. So that's actually going to do it for us today as far as talking about RSI and the ultimate oscillators. Make sure you catch our other training tools videos and ones that will continuously be coming out in the future. That's going to do it for us today, and we'll catch you guys in the next video. See ya.
If you wanna be crypto savvy, we can let investments tally. Let's rally, yeah. Crypto savvy. Crypto savvy. Like, comment, and subscribe. Like, comment, and subscribe, yeah.